welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Right now, we're floating about 30 points higher in trade as far as the Nifty is concerned. We are nearing the 24,650 odd mark. Despite all the choppiness, we have tried to maintain that green tick on the higher side, and all eyes are on whether the markets will be able to sustain the green and, of course, be able to snap that 6 week of losses that we've seen before this week for the markets as well. What's happening within the markets right now? It's a few sectors that are holding up strong: consumer durables, IT, pharma, financial services for that matter, even autos. But metals, oil and gas, realty have dragged today. Even the broader markets are very, very volatile in trade session today. On the Nifty, you have names like Wipro, Eternal, HDFC Life, Infosys and Asian Paints among the top movers, whereas Muthoot Finance post earnings continues to hold its top ground as far as the F&O action is concerned. You also have Manappuram Finance, Kalyan Jewellers, all of these stocks also hovering higher in trade. Well, when we look at the stocks which are declining, Tata Steel is dropped by 3%. You have Adani Group stocks like Adani Ports declining in trade. Tech Mahindra, Hero Moto, JSW Steel and BEL are some of the stocks on the Nifty that are still dragging in trade as of now. But let's welcome our guest on board, Mr. Abhishek Basu Malik, the co-founder and fund manager of Sri Rama Managers, is now joining in on the program with us. Warm welcome to you, and thank you so much for taking the time out, Abhishek ji, and season's greetings to you. We start off with Independence Day celebrations tomorrow, thereafter Janmashtami, and of course this kick-starts the festive season at large as well. We've had that 6 week of consecutive losses for the markets. I want to understand from you, are there signs probably giving you an indication that we somehow have a bottom in place and there could be now a recovery, because we've actually seen probably the worst of the tariff news that could have come in. We've also more or less digested what happened on the earnings front, which were muted largely as well. So how would you look at the market sentiment?
So good afternoon to you and all your viewers. Happy Independence Day in advance to everyone. Like you mentioned, I think earnings season has been muted. This week has been better compared to the last preceding 6 weeks in the markets. So, and tomorrow there is this big meeting that everyone is looking up to between the US president and the Russian president. Now, I think a lot of the challenges or a lot of the sentiment around in the Indian markets is going to, people are looking into that meeting to take cues into the future of the markets, because obviously 50% tariffs for Indian exports to the US would basically mean that a large part of the US exports is practically going to come to a standstill. So, it has to get down for it to be really practically workable. The tariffs from the US front. So that is where I think a large amount of investor focus is going to be. Whatever else is happening right now is probably secondary to the short-term focus on what is happening on the tariff front.
Absolutely. Abhishek sir, I think the talk point for the beginning of our conversation today also has to be the report that is now being seen in the limelight, and that's S&P Global, which has upgraded India's rating to BBB from BBB negative. It has cited strong economic resilience, sustained fiscal consolidation and robust growth. The stable outlook that they have shared also reflects confidence in the continued policy stability and the infrastructure investment as well. What S&P Global has also noted is that there will not be any major impact of the US tariffs on India. It's likely going to be manageable, they say, with sound economic fundamentals that are expected to support the country's growth momentum over the next 2 to 3 years. Now, this is music to the ears, especially when over the last couple of weeks, we've only been hearing people debate a lot about, a lot of people calling India a dead economy, there has been so much of talk about, whether, we are in the right path of growth. What will happen if we have been imposed by 50% tariffs? How would you look at this report?
Uh, I mean, this just came in maybe half an hour back or something.
Yeah,
So, we've not yet got a chance to go through it.
sure,
But,
sure.
primarily, uh, all upgrades are welcome. Having said that, I don't think these global rating agencies are very credible. Most of these rating agencies uh, either, I mean, very difficult to follow what their actual point of view is, because lot of it seems to be sort of coming from a political agenda, or some kind of a bias against emerging markets, towards developed markets. Because if you look at the debt condition in the US, US should not be at the top of the ratings that it has been enjoying for so many years. Similarly, I think India does not deserve to be where it is today. I mean, even with this upgrade, I am not sure, whether we are actually getting, the actual, uh, the strength of the economy is getting captured in these ratings. So I would always tend to look at these ratings with a pinch of salt. But yes, the direction is good. The timing is good for us, because obviously right now there is a lot of negative sentiment because of the dead economy and things like that. And the fact that India is actually growing at probably a tad slower pace than what we would want it to be. I mean, the kind of demography we have, we would probably need and expect more than 10% growth uh, for the next, decade, 2 decades, if we really need to have a chance, at a significant per capita GDP kind of a place. Because if you look at the demography, if you look at the numbers, I think by 2045, 2050, we will be losing our demographic dividend. So we pretty much have 20 years, and in this 20 years, if we are not able to maximize our growth, then we'll probably remain trapped as a middle income country.
Absolutely. Let me just also highlight a few more points that are have been brought in as far as S&P Global's report is concerned. So the agency definitely says that it India also remains among the best performing economies in the world. It says that India has staged a remarkable comeback from the pandemic, with real GDP growth over fiscal year 2022 to fiscal year 2024 averaging at 8.8%. That was the highest in Asia Pacific. And they expect these growth dynamics to continue in the medium term, with GDP increasing 6.8% annually over the next 3 years. Now, this has been a moderating effect of the ratio of the government debt to GDP, despite still widening fiscal deficits, is what they have marked out for us. What would also come in as a question right now, Abhishek ji, is that whether after S&P, will there be other ratings agencies which will follow suit or not? And what will this do to the overall government borrowing program? And, will things get much easier after this as well?
So I think most of these agencies tend to sort of run in herds. So I'll not be surprised if the others sort of follow suit and upgrade India. Uh, what it does to government borrowing, etc., I think is more a function of the fiscal plan that we are planning. I mean, that we will need to come up with, because if the see, a lot of these right now is in flux, because if the tariffs continue to be high, then there is a possibility that the government may need to step in, especially for very high, industries where there's very high job, creation, or where there are a lot of jobs at stake. So, industries like textiles, gems and jewelry, where a lot of people are employed. and these industries are very high up on the exports list. So the government may need to have some kind of support to these industries that may be needed. So a lot of it will depend on how the government juggles its various resources and plans and programs, because the need of the hour is also to invest in infrastructure, in defense, in manufacturing, to boost the economy. Because if you look at the GDP, if exports are going to get hit, and if we want to maintain GDP, the pretty much the only way we can do it is by expanding our domestic consumption and domestic infrastructure.
Okay. Another key point that I wanted to discuss with you is that how are you looking at some of the contradicting surveys that have been brought in? Like yesterday, we were focused on Bank of America's survey that actually put in a fact that India is being seen as the least favored nation within Asia Pacific for fund managers from the most favored list, and that's after, because they actually thought India was going to be among the favored list of nations when it comes to tariffs, whereas it's now, with the 50% of tariff being brought in, is being seen one of the least favored at this point in time. So how do you see these contradicting reports?
So it's not contradicting. I think the viewpoint or the perspectives are different.
Yeah.
S&P is looking at a longer period, core economic perspective, whereas the Bank of America report is looking at it from a investor's perspective on a short to medium term. So the perspectives are different, and I think both are right in their sense. I mean, the next 2 to 3 years, 5 years, 10 years, I think India is definitely one of the key countries to be in. Short term, again, there are challenges, right? Because China, the Chinese market is cheap. There is again renewed interest globally to invest in China, and if, let's say, there is some development and Russia-Ukraine war, either gets resolved or gets scaled down something, then there may be a lot more diversification of funds into places like Ukraine, etc., where there is going to be development efforts coming in from Europe and other places. So there are the perspectives of investors are different from perspectives of economists. So there's no dichotomy between them.
Okay. Let me also just bring in another aspect that I wanted to discuss is in the interim of last 3 months, what we've also seen is that the FIIs have largely stayed away from India or have been on a pulling out spree as well, looking at the uncertainty that's been looming large and the impact of the policy changes, whereas it's been the DIIs that have continued to pour in money in the Indian markets. We've seen what happened with the mutual fund flows, highest ever equity mutual fund flows, upwards of 40,000 crore rupees is what we've seen for the first time happen. SIPs continue to be at record high levels as well, despite all the shakiness in the markets as well. How are you looking at the investment, kind of philosophy that both FIIs and DIIs have at this point in time?
See, completely different perspectives. I think DII flows or, investments by Indians in India has changed. I mean, I've been saying this for a while. It's like what happened in the 80s in the US, where 401k plan was launched, and common retail investors started investing in the US equities in large numbers. I think the mutual fund SIPs have actually opened up a similar kind of similar kind of investments in India, in Indian equities by the retail investor. Plus, now that we have, nearly everyone in India has a mobile phone,
Yeah.
have very cheap connection, free sort of brokerage plans. A lot of people are, getting into investing with when they're very young. So people just getting into the workforce, getting their first salaries, are starting to invest. Couple that also with the lack of, you know, other alternative investment options which are lucrative. So people now are looking at bank FDs at 6%, 7%, and then they are thinking that, why would I put my money in a bank FD? And they're going to a mutual fund, and you are also seeing this getting reflected in the commentary of the banks, that they are finding it difficult to raise CASA. So, this is a change in behavior, and I think this is going to be a permanent change in behavior. If you look all around you, all the youngsters that you meet are mostly investing in equities directly or through mutual funds, or through PMS funds like ours, and things like that. So that's what is happening now. Looking at the FIIs they've always been opportunistic. They've sort of bought in and out of countries as a basket. And right now, I think the overvaluation of India vis-a-vis other markets is what is playing, sort of, this being one of the main factors. As and when I think, things change, tariffs sort of stabilize, I think some of these FIIs and FPIs will come back.
Okay. Let me also talk to you about, the liquidity is a flush that we see in the Indian markets right now. After this last 6 months of weakness in the markets, how do you look at the valuations within the markets? Are there any pockets that are staring at you, with attractive valuations that you would want to go big on right now?
So if you look at across the market, I think Nifty is roughly around 20-21 P. So it's not a screaming, undervaluation. Neither is it very, very, overvalued. So we are somewhere in that kind of Goldilocks kind of a scenario. Neither are we overvalued, neither undervalued. There are pockets where, there are some companies or some industries which are, trading at significantly higher valuations. There are also pockets where there is, again, sort of lower valuations. But that has always been the case. I think over the last, 8-9 months, the markets have sort of come off a bit. At least the broader markets, may not be the top, 10, 15 where, they are holding up, but at least in the mid and small caps, there's been significant corrections in a very large number of companies that we track and follow. And so there are companies which were overvalued earlier and now coming into a lot more, more decent valuation zone. Would I call stocks very cheap right now? I don't think so. I don't think any good company is available, at mouth-watering valuation levels. So, it's a mixed bag, I would say.
It's a mixed bag. Would you also say that this after the earnings have largely panned out, have there been any pockets that have already shown you some green shoots, or are there any pockets that are showing red flags that could be watched out for even in the next quarter?
See, green shoots, obviously, if you look at the cement company numbers, have been really good. Agrochemicals have been good. Pockets of specialty chemicals have done well. I think IT has not done as well as we thought it would. But things are probably, my sense is we are at the probably at the bottom of the curve of IT, and maybe one quarter forward things will get better. Same with NBFC, banking, MFIs. I think most of these spaces, we're probably in the space where things would start getting better from here. Rural demand, with the kind of monsoons that we've had, I think rural demand is going to be a significant driver of growth in the next 6 months at least.
Okay. Abhishek ji, help us understand when it comes to, the market cap based investment. Where does that come in at this point in time? When we started off this calendar year, everybody had focused on large caps as their go-to basket of stocks to be in. How has the picture evolved at this point in time? Where do we stand?
See, I think again, reiterating my view always is that one should not be investing based on market caps, because when you look at the promoter of a company, he does not get up in the morning and think that, okay, today my company is a mid cap, so I'll behave differently. If my company was a large cap, I would behave differently. So they go in and do their work. So the focus has to be on the kind of work that a company is doing. What is the prospect, the industry tailwind? If does the company really have growth prospects, things like that. So market cap is more for liquidity filtration for funds and institutions. Otherwise, for individual investors, retail investors, I don't think market cap should be a big determinant of whether we should be investing or not. Having said that, there is another angle to it, which is that with this broad basing of the Indian investor, right? So a lot more money coming in, we will continue to see that more and more interest in the mid caps and small caps, because large caps, there is only so much room for people to buy more of large caps. Ultimately, the incremental buying will come into the lower market cap companies. So that is in a way good. Also, we are seeing IPOs coming up, once more. That's again a fairly good sign, because over a period of time it helps you broaden the basket of opportunities that an investor has. And after a year, 2 years of a company being listed, you know what the company is doing, their public track record, and your options of investing in more and more diverse types of businesses increase. So overall, I think that's the way we should be looking at, instead of looking at market cap wise categorization of stocks.
I'm glad that you pointed that out, because IPOs was going to be my next question. Because JSW Cement, we've seen list today. It slipped a tad bit after getting listed. We've seen NSDL, take place last week, and how that has moved forward substantially within few days of its getting listed. What has caught your attention in the recent basket of stocks that have come in as IPOs and got listed?
So I think basically these two companies, I mean, NSDL, obviously, they work as a duopoly, CDSL and NSDL, very bright prospects for the company. Similarly, JSW Cement, prominent player, very strong parentage background, of the group. Although they are, relatively a smaller player, they have their work cut out, because the top two players now in the industry are, maybe not only top two, the top 3-4 players in the industry are getting into a cutthroat competitive mode. So I think JSW, if I'm not mistaken, is the 7th largest company. So they have their work cut out. It's not going to be easy for them to sort of go up, especially when they are at least saying that they are not very keen on M&A in the near future. So it's going to be challenging and interesting to see how JSW Cement sort of does in the next 1 to 2 years, and with the expectation that now we are already in the beginning stages of an upcycle in cement.
Absolutely. Let me also just dig a little deeper and ask you to help us understand, when it comes to the upcoming festive season that is going to be the key trigger that all the investors are going to be looking forward to. Have you identified a few pockets where we could play for an upside in the festive season? Is it going to be the traditionally, names or traditional sectors that used to always perform well during the festive season, or is it going to be a different cycle this time around? How are you looking at it?
I think it'll be the same cycle. The only difference or nuance I could add is that this time, because the monsoons have been good, rural income is picking up. In fact, I was looking at a report which was saying that rural FMCG is now outperforming urban FMCG. So with all of those in the backdrop, I think one should look at maybe two-wheelers focused on rural areas, other consumption basket items. So uh, and one another interesting thing is this time I think the uh, festival season is slightly ahead. So I think there
Yes.
is going to be some benefit in Q2 also for some of these companies. So that would be interesting to watch out for.
So, autos, consumer durables, should one also look at FMCG? How are you looking at these pockets? Maybe retail or other consumption basket, QSR, what would do well? Even tourism for that matter.
I think tourism now is again like you were saying that it's sort of now become a perennial theme. I think
Yeah.
Indians overall are traveling much more. So that's probably not going to be all that more seasonal. But yes, I mean rural consumption basket includes two-wheelers, it includes consumer durables, it includes maybe FMCG to an extent. But I'm not that bullish on FMCG because there's a lot of lot of competition in FMCG that has come up because distribution has got sort of democratized. Uh, Retail, I think, is going to be a big a big player here. Organized retail, we are seeing some retail players who are focused on tier two, tier three, do extremely well. So, I mean, all of these baskets look pretty interesting.
Okay, fair point. Last word from you, Abhishek ji, when it comes to the Nifty outlook for the calendar year. Are we going to end with a green and that with a handsome green, or is it going to be some more time of volatility and this year could be rather a muted one? How would you really expect this year to pan out?
Probably, next week would be a better time to answer that once we see what Mr. Trump and Mr. Putin are up to. But having said that, I'm always bullish. I always believe that India is going to do well over the medium to long term. Uh, Individual year is difficult to call out. I think we've had a great run post COVID for 2-3 years. Uh, Last 8-9 months has not really been that great for the markets. This year could also be a year of consolidation, but even if that is be so, uh, I don't think as investors we will lose much. I my gut feeling is that we might end up higher than where we are today, but we
Okay.
could always be wrong.
Okay, we could be ending higher is the gut feeling right now, but depends on how the trade talks progress. Meanwhile, we also had the trade secretary also sharing some statements. We have some flashes coming in, and I just wanted to read that for you. Trade Secretary of India has said that they are fully engaged with the US on the trade deal talks. He's also said that the US deal talks are happening at multiple levels. There's also an aim to conclude the trade talks with the US by September, October. What's also being said is that trade developments are also good with China at this point in time. Trade is moving positively with China, and Trade Secretary has also said that US secondary tariff resets on how geopolitics really unfolds till August 2027 is going to be important, and they are also hopeful that US may not levy extra tariff if geopolitics is favorable for India as well going forward from here. So those are some of the flashes that just came in. I wanted to highlight for you since we were talking about that as well. Thank you so
So
much,
let's keep our
Mr.
fingers
Basumali.
crossed.
Yeah, we're keeping our fingers crossed. That's the best way, and we'll see how it pans out. Well, wish you well. Happy Independence Day in advance, and season greetings for the upcoming festive season. We'll see you soon
Thank
in the next week to get more clarity from you as to how do we move forward from here. Thank you so much, Mr. Basumali. Last 2 minutes before we shut shop for the day, viewers, and let's quickly look at the markets. We have now slipped into the red. What was being hopeful that at least till the last day of the trading session we'll see a green tick. You can see 24,610 on the Nifty, minor 6 to 8 point of a dip right now. What has really caused this? Let me just quickly reiterate for you the stocks that are contributing on the negative side. Reliance Industries. Let's pull up that one. The largest company by market cap, and you do see a 15 point of a negative contribution coming in from there. Tata Steel, about 7 points of a contribution coming in on the negative side. There's a 0.7% decline on RIL, and that's leading to some pressure build up because of the heavy weight that it carries. ITC, L&T, HUL, TCS, HCL Tech. Some of the IT players and some of the FMCG players have also slipped. This is despite Infosys continuing to rally. About 19 points contributed on the positive side. HDFC, ICICI Bank, Eternal, Wipro, Asian Paints. These are all the stocks that are contributing on the positive side as well. Consumer durables, 0.6% higher, top moving sector. IT follows with about 0.4% gains, but it has cooled off from the day's high point. Financial services, private banks, PSU banks also on the higher zone. But metals, oil and gas from the commodity basket have both dragged today. FMCG, infra and even the mid and small caps have actually slipped in trade. Let me talk about the F&O move. Muthoot Finance, top mover, almost 10% higher. Manappuram Finance, almost 4% higher. Kalyan Jewellers, these are the top movers in the F&O pack. On the declining side, you have HPCL, Max Healthcare. You also have NMDC and Vodafone as the ones that are seeing some pressure build up. The final print is on your screens, 24,616, a minor 3 point of a cut on the Nifty today. Well, that's how the markets have actually shut shop. When we look at the Nifty Bank, let me just pull up that as well to see how things are shaping up there. At least half of the Nifty stocks have slipped into the red now. Let me just quickly look at Nifty Bank. That's ending with about 0.3% gain, so that's positive. Whereas IT also is seeing gaining among the top movers within the sectoral front that we are actually looking at right now. But a whole host of sectors that have actually come under some pressure as well. So that's how the markets have shut shop, viewers. We will definitely, start off with our market coverage on Monday. But, in the meanwhile, we will continue to get you all the insights that you need from the world of business, finance, and of course, towards the end and tomorrow, everything that will be buzzing in the US. With US President Donald Trump and Putin meeting. Back home in India, Prime Minister Narendra Modi making a speech. All of those will be extremely important cues to really watch out for as to how the markets really shape up for the next week as well. But I wish you all a very happy Independence Day in advance from the entire team of Business Today Television, and of course a very happy Janmashtami as well. Stay tuned with us on Business Today. We will continue to get you fascinating insights from the world of markets, business and finance. Thank you so much for tuning in.
Well, I'm here in Mumbai and